Greetings, everyone, and welcome to the University of Minnesota Alumni Association's webinar series. My name is Marissa Smith, and I'm the Director of Student and Recent Alumni Relations here at the UMAA and your host for today. I want to thank you all for joining us for this important webinar. Today's topic is Student Debt Management and Refinancing with Nicole Newell from Credible. Before we get started, I have just a couple announcements to share. We always like to remind our webinar attendees that this is an ongoing free series being offered by the Alumni Association, where we have conversations with experts about career, life, and learning topics. And we're able to offer this webinar series in part by our Alumni Association members. So if you're a member, thank you. Because of you, we can make opportunities like this happen. And if you're interested in joining the Alumni Association and supporting our work, you can learn more at umnalumni.org/membership. And speaking of opportunities, we have a couple of other exciting initiatives coming up that I want to share with you. So many of you may already know we recently launched the Maroon and Gold Network, which is a new free online platform from the Alumni Association for accelerating student and alumni career development. You can think of it as LinkedIn on steroids. So alumni from near and far have joined. We have over 1,000 in the platform currently. They've all said, yes, I'm willing to help students and other alumni with their career development. They've selected the topics that they're interested in, and students and alumni alike can reach out to each other to connect for informational interviews, job advice, resume review, talk about industry trends. It's been really cool to see how this platform and community is growing, and would definitely encourage you to check it out if that's something that you're interested in. And you can learn more at umnalumni.org/maroon and gold. Another exciting thing coming up is tomorrow night we have U of M night at the Minnesota Twins. So if you happen to be local in the Minneapolis-St. Paul area, would love to have you join us. It's a really fun night we have planned. Plus, with your ticket comes that really fancy maroon and gold Twins hat. So there'll be lots of alumni out there, lots of fun U of M surprises planned. Tickets are still available. You can visit twinsbaseball.com/UMN. And we do still have 2 more webinars coming up yet this spring. On May 2nd, we'll be chatting with Heidi Meyer, who's the Executive Director for the Office of Admissions here at the University of Minnesota. She'll be talking about the latest in college admissions and tips for parents and students in navigating that process. And then on May 18th, we have an exciting conversation planned with Dean Laura Bloomberg from the Humphrey School of Public Affairs. Her talk, Leading Together, Finding Common Ground in Uncommon Times, is going to highlight her research and practices to achieve positive results when collaborating across teams and trying to achieve a common good in a diverse world when people disagree. Couple of housekeeping items. You have joined the presentation listening in your computer's speaker system by default. If you would prefer to listen over the phone, just select phone call in the audio pane of your GoToWebinar panel, and dial-in information will be displayed. Also, if you experience any audio difficulties while listening via your computer speakers, this can sometimes be caused by having multiple applications open and using up your computer's bandwidth and affecting network performance. So feel free to just check your connection and close any unnecessary applications on your computer. Questions are welcome, and I know our presenter will be taking questions at the end, so please feel free to submit those using the questions pane on your GoToWebinar panel. We'll be monitoring them along the way, so we definitely want to hear from you. All right, so without further ado, it's my pleasure to introduce today's presenter, Nicole Newell. Nicole is the Partnerships Manager with Credible, and Credible makes it quick and easy for you to save on your student loans. Credible's founding principles are to provide borrowers with the level of transparency that they deserve as a multi-lender marketplace that allows borrowers to receive competitive loan offers from its vetted lenders. Credible empowers consumers to take control of their financial future. Borrowers can fill out one form and then receive and compare personalized offers from numerous lenders and choose which to serve their individual needs. So I know she's going to share a lot more about what that all means and some other tips and strategies, and I'm very pleased to welcome her, and we'll now turn things over to her. So just give us 1 second while we change the presenter.
Awesome. Let me go ahead and pull this up here. Cool. Well, thanks so much for the intro, Marissa. I also want to thank everyone else for joining us this afternoon. Again, my name is Nicole Newell. I manage the University of Minnesota Alumni Association partnership over here at Credible, and we're very excited to be sharing this webinar with the UMN alumni today. So just a quick agenda. I'll give you guys a little bit of background on Credible and who we are. We'll talk about the definition of student loan refinancing, how to refinance your student loans, things that you should be considering when refinancing, how to get the best refinancing offer, and then I'll kind of give you guys a quick demo of the Credible platform, and then we'll go into a Q&A session. And then before we get started, I wanted just to provide a bit of background on Credible, just so you guys have a better understanding of who we are and why we're hosting this webinar today. Credible was founded in 2012 with the idea of bringing simplicity, choice, and unbiased support to all of life's financial decisions. So our main bread and butter is going to be refinancing. So as it relates to this product and this webinar in particular, we're really here to make the student loan refinancing process simpler and more transparent. And we do this by allowing student loan borrowers to receive pre-qualified refinancing rates from multiple lenders. And so you're really able to compare them side by side on a single dashboard. And if you see an offer that you like, we make it really easy to request that offer and then complete the rest of the refi process with that chosen lender. I also want to point out that Credible is not a financial advisory firm, and we are not financial advisors. The purpose of this webinar is strictly educational. Should it be considered financial advice by any means? We're really just here to help you guys better understand student loan refinancing. And since student loans are pretty complex and not a one-size-fits-all, I'm going to keep things pretty high level tonight and just leave most of the time for our Q&A. So as I'm presenting, feel free to submit your questions and we'll address as many of them as we can at the end of the webinar. Cool. So as most of you guys are probably aware, and most of you are probably attending this webinar, we are in and we have been in a student debt crisis for the last few years now. We're currently around $1.4 trillion in outstanding student loan debt in the US, with about 44.2 million Americans carrying student loan debt. And the average Minnesota graduate carrying almost 32,000 in student loan debt. And this is not specific to University of Minnesota alumni, but just any schools in Minnesota as a whole. So given this number, many of you are probably wondering what you can do to get rid of this burden, and that's really where student loan refinancing can help. So what is student loan refinancing? Before we get into that, one of the most frequently asked questions is the difference between direct loan consolidation and student loan refinancing, which is a great question because they're sometimes used interchangeably, but they're also different. So direct loan consolidation usually takes place through the federal consolidation program, which lets you combine your government loans so you can make a single monthly payment. You can also extend the term of your loan at the same interest rate. And while this could lower your monthly payments, it could also mean that you pay more interest overall. And so we kind of look at this as like getting your house professionally cleaned. And then we look at refinancing more like buying a new house. So refinancing is where a private lender will pay off your loans from your existing lender, similar to mortgage refinancing. So you might be familiar with it in that sense. And then the result of refinancing is a new loan with that new lender at a potentially lower interest rate or a lower monthly payment. So below is an example here of a graduate named Cole. He graduated in 2010, and a lot of his federal loans were taken out at the peak of federal rates. But after refinancing, he was able to reduce his interest rate from 8.9% to 3.75%, which ended up saving him over $40,000 in total interest over the life of his loans. So why does refinancing exist? Refinancing exists because lenders really saw the opportunity to help graduates who did all of the right things. So you got your degree, you have a steady job, you're making consistent payments on your loans, So there's really no reason you should be tied to that high interest rate that you were given at 18 years old when you had little to no credit history. And there's a couple of other things that as well that affect that. So a private lender is going to be subject to market rates, and not only have interest rates dropped over the last couple of years, but they're often lower than a potential borrower's current interest rates. And additionally, your chance of default is lower post-graduation. So a bank is usually willing to offer you a lower rate. They're willing to take a little bit more risk on you. And that's just because after graduation, you gain employment, you have a work history, and all of that just makes you a better candidate since you're more likely to pay them. And then lastly, private loans aren't one size fits all like federal loans are. They're personalized. So for example, federal loans are dictated by whatever year you took them out in, and they don't take into account your credit history, your employment, or other things that might make you an attractive borrower at this point in time. And if you take advantage of private loans, they will be customized for you, customized from your history as a borrower, customized from your income, credit score, and so on. So how do I refinance my student loans? So without Credible, you would seek out lenders and you would have to sift through the different banks, the different credit unions, and all of the new lenders in the space who allow you to refinance. Then you would have to submit an application to each one of those lenders. Generally requires your loan balance, income, reference, credit score, so on. And then you would have to select the offer and try to make sense of the differing offers, and so on. And so you'd be responsible for finding all of them, submitting your individual applications. Once you do that, you would need to compare all of those and then select the one that makes the most sense for you. And it's kind of a complicated process and it can be quite time consuming. And with Credible, it's really easy. All you have to do is fill out a simple form. This has about 13 fields and takes no longer than about 2 minutes. And by doing this, you're able to compare pre-qualified rates, not ranges of rates, from multiple lenders on a single dashboard. So you can think about Credible as kind of a Kayak for student loan refinancing. And as I mentioned earlier, refinancing is not a one-size-fits-all approach. So using Credible, you're really able to compare these offers based on what matters most to you, whether that's reducing your monthly payment, reducing your overall repayment, or reducing your term. And I'll go into more detail on how this works later in the presentation, but that's kind of the difference here between going direct to a lender or just going through Credible. And just a quick reminder to continue asking questions throughout the webinar. I will address those at the end, so keep on asking away. So a few things you should consider before refinancing is short-term versus long-term repayment. So depending on your student loan repayment preferences, we typically see two types of borrowers: those looking to pay off their student loans faster, and then those looking to reduce their monthly payment. Payment terms can range from relatively short, about 5 years, to 25 years, which is a pretty big difference. And a lot of you may be thinking which option is better, and this is really just going to depend on your individual financial situation. Regardless of which term you choose, it will make a financial impact both now and into the future. So I would just suggest thinking about what your short-term and long-term goals are, and then choosing the right option for your unique individual situation. A couple of upsides to the shorter term. Obviously, shorter term means you'll be paying back faster. Like any other debt, the quicker you pay off, the faster you stop paying interest. A potential downside of having a shorter term, again, depending on your financial situation, is that a shorter term will mean higher monthly payments. So if you feel more comfortable taking on a bigger payment each month, this might not be a bad thing for you and will end up saving you in the long run. On the other hand, it could be a burden to have the higher monthly payments, so just something that you'll want to think about. And then as it relates to a longer repayment term, if you're feeling financially burdened and you need some breathing room, a longer term could be the better option for you, as it does present lower monthly payments. So securing a low monthly payment can help you right now if your budget's already a little bit tight. And then one thing to point out is that you will end up paying more in the long run due to interest, but it could be a better option if your budget's a little bit tight and you need some breathing room at the moment. And then I want to highlight at the bottom here the sample set of repayment options on this slide that were once offered by one of our partner lenders. As you can see, the monthly payment may be higher for that 5-year loan, but the borrower would save almost $10,000 in interest over the life of the loan. So just something to think about. Something else you should consider is fixed or variable rates. So interest rates are an important concept to wrap your head around if you're considering refinancing, especially when given the option to choose between fixed and variable. Getting back to basics for a second, an interest rate is going to be the amount charged by a lender for the use of the money that you're borrowing. So for example, if you start out with $10,000 loan balance at an annual interest rate of about 5%, you would expect to pay about $500 per year in interest. Depending on the type of student loan you take out, you may be offered a choice between a fixed and variable interest rate loan. And some of you might know this, but for those who don't, variable has the ability to change over the life of your loan, whereas a fixed rate would remain the same unless you refinance it. So as I mentioned earlier, rates on government student loans are always fixed and don't take into account the risk posed by the borrower. That can be good if you have little credit history. If you have good credit, however, you may qualify for better rates from a private lender, particularly once you've graduated and you're earning a good income. So let's talk about the upsides and downsides to both fixed and variable rates. So with a fixed rate, some of the upsides are that it's predictable, as in it's set for the life of your loan. You have no risk of losing that rate if they rise. Potential downside is that you might end up leaving some savings on the table since fixed rates generally start higher than variable rates do. On the variable front, one of the upsides is you could have those lower introductory rates. So if you're able to put a lot up front on your loan, you can potentially save significantly more. Potential downside is that there's less predictability, making it a little more difficult to budget, and you also have the possibility of interest rates significantly increasing over the life of your loan. So should you add a cosigner? If you think you have a low credit score, it might be worth adding a cosigner. With that being said, it's really never a bad idea to add a cosigner. If you have a cosigner who has a strong credit history and a high income, someone you have a strong relationship with, it's really never a bad idea to have them on there because all that does is lessen the risk of you as a borrower to the lender, and they might be able to actually get you a better rate that way. So a few benefits, greater chance of approval, lessens the risk taken by the lender, could potentially get you a lower interest rate. And then some of the drawbacks are that they can be difficult to find. The cosigner can be held liable to repay in the event that you cannot pay your own loans, and they can take multiple years to remove. So just something to think about. So government repayment programs. So federal loans offer a few different repayment options that are not available with private lenders, including a graduated repayment plan in which payments start out low and then increase over time. Another example is income-driven repayment, such as pay-as-you-earn or IBR, which allow borrowers with high debt-to-income ratios to make lower monthly payments with the remaining principal eligible for forgiveness after about 20 to 25 years. What's important here to know is that if you have federal loans and you're currently enrolled in one of these programs or you plan to enroll in one of these programs, it's important to point out that you will likely lose these benefits offered if you refinance with the private lender. On the other hand, I also want to point out that because you're stretching your payments over a long period of time, this can end up increasing the total amount of principal and interest repaid compared to the standard 10-year. So again, just something that you'd want to consider before refinancing through a private lender. So how do I get the best offer? So first and foremost, be in good credit standing. Your credit score is very valuable in determining how good of a refinancing offer you will receive. If you have an average credit score, you'll probably receive an average offer. So just something that you want to kind of be aware before going into this. Have long-term work experience. proving financial stability will help remove that risk that may concern some lenders. A stable employment for over a year will really help validate your financial situation. Be aware of current market rates, keep an eye on them, be aware when they're low. That usually signals a prime time to refinance. As most of you probably know, they will be increasing this year. And so it might be a good time right now to kind of go through and see what you could qualify for. And then apply with a cosigner. Again, adding a cosigner can help most applicants receive a better interest rate. Just be sure to choose someone with a great credit history, a good employment record, and someone that you're close with. And then have a low debt to income ratio. So regardless of what type of loan you're looking to take, having a good debt to income ratio is always important. Lenders are going to look at your monthly debt as a fraction of your monthly income. And so the lower your debt to income ratio, the better chance you'll receive the best refinancing rates possible. And then lastly, check out multiple lenders. Be sure to compare multiple lenders to find the best rate for you. Lenders have different underwriting models that determine your loan eligibility. So your degree of qualification may differ between lenders. And this is really where Credible comes in, where you're able to request those pre-qualified refinancing rates from multiple lenders and then compare them side by side. So to save a bit of time, I've taken some screenshots of our form, and then I'll show you guys what the interactive dashboard looks like, which is really the best part. I'll go through this pretty quickly, and again, continue to ask those questions, and right after this, we'll jump into the Q&A. So what you'll do if you would like to check your rates on Credible is you would actually visit the University of Minnesota Alumni Association page, which I've included the link at the end of this webinar, so you'll see it later, but it's credible.com/partners/UMN. And what you're going to do there is create an account using your email, as your username, and then creating a password. It'll take you into the first part of our form. And before we jump into this, I just kind of want to quickly highlight our client success team and their hours over here on the right side. I encourage you guys to reach out to them at any time throughout the process. If you need any help or you have any questions, they're really our internal experts over here, and they can be really helpful in the process. So back to the form. So the form is about 13 fields and shouldn't take longer than a couple of minutes. Basically, we're just going to ask you a few questions about your education right here. What school did you go to? What is your refinancing goal? And then we'll have you tell us a little bit about your finances. So right here, your total loan balance you're looking to refinance. Also worth noting that there's these little green links below the questions in case you're confused on how to answer. And you can also call our client success team, who would be willing to help as well. And then a little more about yourself. So your name, your birthday, primary phone number, your address, and so on. And then before submitting, I just want to point out the terms and conditions, because it's important to understand how we're able to get you in front of these personalized rates without affecting your credit score. A lot of people ask us how this is possible. And what it really comes down to is the relationships Credible has built and the integrations built through those relationships into our process. So on one side is our relationship with the top credit reporting agencies. So think Experian, Equifax, TransUnion. Those relationships allow us to run a soft credit inquiry on you as a borrower. So this doesn't affect your credit score, does not show up on your credit report. And what it does do is it gives us the necessary information combined with the information that you would have just filled out on those forms I just showed you to run up against the underwriting model of our partner lenders. So for those of you unfamiliar with this term, an underwriting model is how a lender assesses the risk of a borrower. So depending on the risk assessment, they will either be able to offer you, in this case, a refinance or not. And then on the other end, each lender has their own underwriting model. And so we, Credible, as a part of their agreement to be on our marketplace, insist they give us this underwriting model to house on the back end of our site. long explanation, but basically it allows us to combine the information you've given us with the soft credit inquiry information and then run it up against those underwriting models that we house on our back end. And the fruit of that for pre-qualified borrowers is that we can show you these rates instantaneously in a Kayak style dashboard. So let me just show you guys what this looks like. Okay, so once you fill out that form, you are able to look at your options in this Kayak style dashboard. And what you're able to do is kind of float the most important elements by toggling or filtering the descriptions over here. And then after you decide which offer you're interested in, you'll need to turn this into a firm offer by filling out more information on the lender website. And then one thing I wanted to note here is that none of your information has been communicated to our lenders at this point in time. And even if you walk away, Credible will not submit any of your information to our lenders until you finish the process by clicking Submit My Information. And then even at this point, the only person who will see your information is the lender that you choose. And that's just because it makes it easier to start the process with them to complete the loan refinancing. So that is the dashboard. Again, the University of Minnesota page is credible.com/partners/UMN. And with that, we will go ahead and jump into Q&A. I actually have one of our client success loan experts here with me. His name is Alex, and he is going to help me out with the Q&A portion.
Hello, everyone.
Hey, Marissa, I'm not seeing any questions here, so if you maybe want to read a couple of them on your end, that would be great.
Thanks, Nicole, for sharing all that information, and welcome, Alex. And Nicole, you and I chatted. I wasn't sure whether the questions were going to show up since we're in different cities, but I can do the best I can to try to feed some to you all, okay?
Perfect.
All right. So one of the first questions that came in was about that average debt amount you shared at the beginning, being around $32,000. And the question was, is that for undergraduate bachelor degrees only, or is it an average for all degree earners, graduate students only, or graduate students included?
It was all degree earners.
Got it. And then someone asked about Credible's program and if you all charge for the service and finding the best offers and how that works.
So there are no fees with any of our partner lenders, and there are no fees for refinancing. There's also no prepayment penalty. So if anyone wants to make excess payments, they definitely can to pay off the debt sooner. They can also pay off the loans at any time.
And just adding to that, Credible is completely free to use as well.
Another question is, can someone refinance through Credible multiple times?
Yes, that is possible. Since there is no prepayment penalty, you can definitely refinance again with any of our partner lenders. So it can be done. The only restriction might be that some lenders have payment restrictions on the loans that payments need to be made, but it depends on the lenders that they're going to go through with.
Someone's asking if you can switch from a short-term to a long-term payment and vice versa. Maybe that's similar to the last question.
I think they're trying to change terms. It would be possible if they refinance. So once you refinance, let's say you refinance at a 20-year term, and then you want to go ahead and go to a 5 or 10-year, you would just have to refinance it. Or since you can make excess payments, you can technically make more payments to pay it down sooner as well.
If you have a low interest rate already with a private lender and make payments each month that are higher than the minimum, are you in the same place as a scenario in which you refinance?
Probably not, because refinancing, if you think of it in its simplest terms, you're taking out a new loan to pay off an existing loan. So if you're paying down, making extra payments with an existing loan, you're just going to be paying it down sooner. Whereas with the refinance, as I mentioned, it's going to be an entire new loan, where it could be new term, new interest rate, and new monthly payment.
Is there any benefit to having a cosigner that has with you, that if you both have good credit, you both have scores in the 800s?
So that's actually one of the good things that we offer is you can actually check to see what effect a cosigner can have on your dashboard. If you receive rates, you can add up to 10 different potential cosigners to see who has the best rate, who has the best effect on the rates. So you can actually rate shop kind of with up to 10 different people to see who would give you the best rates on that. So yes, there could be a potential savings. It's just going to be based off of the difference in strength of credit profiles.
Great. Someone asked if it's better to wait to refinance until they have a full year of working under their belt.
Some lenders will require history, have at least be a year in your employment, but not all of them do. So you can always go onto our website, fill out the pre-qualification form, and then if you do see any rates you're interested in, you can always contact the client success team, and we can always do a three-way call with that lender to see if they would be okay with the available work history.
Some really good questions coming through. Here's another one. Is it better to pay off a private loan with a higher interest rate than pay equally to all student loans, including government loans with middle high interest rates?
That's probably something we wouldn't be able to answer because we wouldn't have the numbers. Probably the best bet would for them to be to try an amortization calculator just to figure out how, some amortization calculators will also allow for extra payments to be calculated. That may give them just a better insight. It will be kind of hard to answer that question. I do apologize.
Sure. Yeah. Another question about how Credible takes married couples into account. If a married couple each have student loans, how does Credible take that into account? Do they ask questions about that?
The form will ask you for household income. So we actually do have a lender where if you're looking to combine loans, you can do that. So it depends on what they're trying to do with the loans. If they're trying to keep them separate, if they want to be cosigner, let's say the husband or wife wants to be a cosigner on the other spouse's loan. So it just depends on what they're trying to do. But we also have a lender where you can combine the individual loans that each party has into one.
I feel like I'm sending questions at you rapid fire. How are you doing? Do you need a break at all, or doing okay?
Good.
Okay. Another one is about market rates. Any idea if and when rates would be increasing, and how can I check these rates?
So we don't have any insight as to how they're going to move since we're not licensed as financial advisors. Most lenders will use a variation of the LIBOR, so either 1 month, and this is going to be mostly for the, it's going to affect more the variable rate, so it's going to be either a 1 month LIBOR or a 3-month LIBOR. If you're talking in terms of variable rates with the 1 month LIBOR, the monthly payment and the interest can change from month to month. So you would just need to look at, the LIBOR, either the 1 month or the 3 month, if you're mainly interested in the variable rates, but it also does affect the fixed rates as well.
Can you explain what LIBOR is?
So LIBOR is kind of like the Fed fund rates or the prime rate that's used here in the US. It's out of London, so it's an index that banks use basically for short-term loans, kind of like overnight.
Question here about how do I know if my loans are private or government? And if I've already consolidated loans, can I recombine them with others?
So probably the best bet would be to contact the servicer to see if they're federal or private. Usually it's going to be, it'll say Fed home loan or sorry, Fed loans on there. So it'll say that's a good indication that it's a federal loan. Second portion was, yes, you can refinance if they're consolidated. One of our partner lenders will actually allow you to do partial loans. So you could potentially just refinance a part of a consolidated loan, but most lenders will accept whole loans. So if you can have a consolidated loan, most likely than not, you're going to have to refinance the entire thing if you're going to combine it with something else.
Someone's asking if the refinancing process affects your credit score.
So it's going to be a two-part process. Checking for pre-qualification rates does not affect your credit because it's a soft credit pull, but if you actually move forward with the rate and we process the request to the lender that was selected, that's a hard credit check, so that will affect your credit. But if you're rate shopping, there is a thing called rate shopping that if you do your hard credit checks within a 30-day window of each other, it should only affect your credit as one as long as the hard checks are the same type.
related question as to asking if there are any other downsides to consider to refinancing that people might not know about if they haven't gone through this before.
Once again, it's going to depend on the type of loans. It depends on if they're federal loans. If you're looking to keep some of the options that federal loans have, can be like income-based forgiveness as well, or forbearance. Some lenders will have a variation of forbearance, but income-based and loan forgiveness are usually tied to federal loans. You just have to outweigh.
Someone's asking for the website address for U of M alumni again.
Yep, it's credible.com/partners, plural, /UMN.
And we typically send an email out to all webinar attendees afterwards with the recording of today's presentation, and we can include that in that email as well, so people can link right to it.
Marissa, if there's any way for you also to send all of these questions back to us, we can provide answers in like a Word document, and we can also send that out via email if that's easy for everyone.
Cool. Let's see. Do you all have time for a few more questions?
Yeah, go ahead.
Can you select which loans you want to refinance, or are you required to disclose all student loan information?
No, you can pick and select as long as they're still individual. As I mentioned before, if they've been consolidated, one of our partner lenders does allow for partial loans, so you could potentially do a consolidated loan. But yeah, you can pick and choose as long as, for the most part, as the loans haven't been consolidated before.
And then kind of related, is it better to consolidate a large amount of private loans and then refinance, or does it not necessarily matter which order?
It shouldn't matter because you can pick and choose. So if you wanted to do all your loans, or if you wanted to leave like the ones that might have a lower interest rate, you can leave those behind. Consolidation might just limit your partner lenders that you see rates or that you can move forward with. It might just limit the number that you can move forward with. So you might have more option if they're still separate.
All right, one more question that I see that looks to be like it's on a new topic. If, and a big if, there is a student loan forgiveness program in the future, how will Credible handle that?
So I guess if it stays current, it's usually going to be federal loans that have loan forgiveness right now. So it wouldn't affect if someone goes through our platform and receive and refinances, since they'll be private loans. So currently, it wouldn't affect those loans if it stays the same any future loan forgiveness. If it also encompasses private loans, that's probably something that wouldn't have information. Probably what the standards would be. I believe right now it's if you work 10 years in public service. So it just depends on where that program would be.
So at this point, I'm not seeing any new questions coming in. Oh, no, one just popped in. Are interest rate discount options on the dashboard?
Yes. So the dashboard will actually show any auto debit discounts if it applies to that lender. There's also, if you do notice, if someone's on the dashboard, if you click on discounts, you may see the option for other discounts, which is loyalty. Some lenders will actually have might actually see an option for loyalty discount. Some lenders have additional discounts if you're like a pre-existing client of theirs. But that's something you would have to reach out to that lender to see how to actually receive that other discount.
One more question popped in. It's a confirmation of an earlier question. It's can you refinance right out of school, or is it better to wait?
So I'm assuming this is going to be a deferment question. So it depends if you can refinance. You can definitely refinance. You can even refinance while you're in school too. Some lenders, if you're enrolled in a graduate school, you can refinance even while you're enrolled. But it just depends if you want to. If you're in deferment and you refinance, you can expect the payments to start right away. So it's just a matter if you want to keep them in deferment, but you can definitely refinance or at least check to see what your options are.
New question popped in. If loan payments are late or the loan is in default, can Credible help get things back on track?
You can definitely try the form. So it will check to see if you're eligible. So it will check to see if it does do a soft credit pull. So it will pull that information to see if you are eligible with any of the lenders. So even if they were in default, you can still try the form. It won't affect your credit, so you can definitely see, if you are eligible with any of our partner lenders. And the form takes 2 minutes to fill out as well.
Call out to the attendees for any other questions that you might have. We're at the end of our list currently. I don't know if there's anything else, Nicole or Alex, that folks typically ask that we haven't heard from yet, or that you want to add, or the Q&A brought up.
I think the most common question is if there's any fees, also how prepayments are made. So if you do make any prepayments, anything in excess of the monthly payment would go towards the principal. So you would essentially be paying down the loan faster. So it'll cut down on that total interest cost. Those are the most common questions.
One more question popped in about can you refinance auto and home loans?
We don't have that on our platform. The closest that we would have is we do have a personal loan pre-qualification form. That's the one thing. The big difference with personal loans is that there is it also takes about 2 minutes to go ahead and see what you qualify for. Personal loans, pretty much instead of the money would go to the person's bank account, and then they can use it to pay off those current obligations. So not a really refinancing, but you could try a personal loan.
Great. Anything else from the attendees? Are credit unions reflected in your lenders?
Actually, yes. With Penn Fed is actually a federal credit union. So yes, we do have one of our partner lenders is a credit union for the Pentagon.
Confirmation, Credible only deals with private loans, not federal loans. Is that correct?
It can be both. So you can definitely refinance both federal and private loans.
But just to add on to that, if you refinance through Credible, it would be through a private lender.
Great. Well, this has been such rich and robust information that you all have shared. And there had been a few comments that popped into the question pane too, just thanking you for all the information that you all shared, and the really tangible, practical advice and that folks can take away from today. So thank you so much for taking the time to share this information with us and with our U of M alumni. And is there anything else that you would want to add?
No, I just want to thank everyone for taking the time to join the webinar. Again, the Credible UMN alumni page is credible.com/partners/UMN. And again, feel free to utilize our client success team. As you could probably tell, Alex, who is on that team, very, very knowledgeable on this kind of stuff, and they are available through chat, phone, and email. So definitely utilize them if you're thinking about refinancing.
Fabulous. Well, thank you, Nicole and Alex, for joining us, and for everybody who tuned in today. And at this point, we'll say goodbye and have a great afternoon.
Awesome. Thanks, everyone.
Likewise.